With your spirit open and unconstricted, look at things from a high point of view. Miyamoto Musashi. Now you may be saying to yourself, how does this apply to stock charting, to trading in the market? It applies very, very well. What it's basically telling you is you have to be unemotional. You cannot be afraid. You can't be full of emotions, worried about losing. You have to be detached. That is because you've traded and practiced so much that you have mastered the ability to watch the charts and to know that even if this trade doesn't work, that you have the ability to make others work. Everything doesn't have to work. Those of you who've taken those 2 trainings that we have just put out, probably the best work I have done in years for you guys. I am very, very proud of them. The first is on the average true range and how to use that to set your stops, to set your profit and loss bands, we'll call it, and again, to focus on what is important. The second is that always winning training that goes through the simple math that shows if you just win 4 out of 10 trades and you limit your losses, you're in the money. You might say, how is that possible? Watch the 2 trainings. I'm going to put them at the end of today's program. Please, over the weekend, spend just a few minutes and watch them. It will change your life. Ooh, that's a big promise, isn't it? Let's jump into these markets. Everything down for the day except 20-year bonds, the ETF TLT. Now, let's jump into these charts. Look at the S&P 500 on your screen right now, down 1.27%, red down candle. Didn't reach the low of 2 weeks ago, but hammering down nonetheless. You can see the Bollinger Band stretching out as the market continues to plummet. We had that one day during this week, I think, where the market bumped up and everybody's like, hey, things are looking great. No, they're not. You can look at this weekly chart and see. Look at that price percent oscillator falling off the deep end. Derivative oscillator, a little less than flat. My friends, incredible downward push and momentum. You've got inflation, insane, the most insane that it's been in, 40 plus years. Gas prices, all-time highs, war in Europe, crazy. Look at this 2-day chart. We have a red spinning top heading down, and again, as we look, oops, almost changed my derivative oscillator there. As we look at these charts, we see, there we go, Friday, it's the first day of the latest 2-day candle. We had a slowdown on the Wednesday, Thursday. That was because of that 1 day of bump up. Derivative oscillator about flat, price percent oscillator heading down, so we have a downward push also in the intermediate chart. And of course, we look at the half-day. Things tried to rally a little bit in the morning, rolling over in the afternoon. Price percent oscillator crossing over, heading down. It's not beautiful. It is nasty out there. But there's always ways to make money. I have been in, and we'll leave, this is where we are, on the S&P as we see that roll over in the afternoon, and even the half-day chart heading down. I've been in PSQ, which is what? The inverse of the Qs. And that trade is working nicely for me. I got into it just a few days ago. It was doing really good. Then it started not doing so good when we had that bump up, and then it started doing good again and working out quite nice. Let's start on the weekly. Price percent oscillator heading down, hadn't reached the low that we reached before as far as price goes. Derivative oscillator still losing a little bit of momentum. That's based upon the prior week, but again, lots of downward movement, lots of downward momentum, things just hammering down. We look at the 2-day chart. It's heading down to derivative oscillator, price percent oscillator down candle. Hasn't hit the low that it hit back on the 8th, nor the lowest low that it hit back on the 24th of February, but things are still tracking down, price below the 2-day and the weekly half-day. Of course, it never crossed over in the S&P, going up and is pulling away now from the red signal line. Doji in the morning, down movement in the afternoon. This market has a lot of weight pushing it down. Now, you might say, Tom, what's going to change this? Well, there'll be bump ups. I talked about that earlier in the week when we had the bump up day. I'm looking at the chart now and we can see when that was on Wednesday. And of course, what did that come from? Well, it came from some news about things resolving. At some point, something will happen in Ukraine. It'll be resolved for the good, the bad, or the ugly. But when that happens, the markets will probably rally. Maybe they'll turn around and go up for a while. And that'll be great. And you know what we'll be doing? We'll be sitting here waiting. If we're in a short trade, we'll close it and we'll ride that momentum up. My friends, if you know what you're doing, it doesn't matter what the charts do. You've got opportunities when they're going up, when they're going down. All you have to do is be able to read a chart. Doesn't matter what the news people say. Doesn't matter what the charts do. If this trade doesn't work, the next one will. You just have to be willing to roll with the punches. You win some, you lose some, you close the trade, you move on to one, and you kick ass. That's what it's all about. Now, that's where we are on the half day heading down. That's where we are on stocks. Lots of downward weight, lots of downward momentum. Things are bad and getting worse. What about bonds? They are up for the day 0.33%. And you might say, Tom, why are bonds going down when stocks are going down? Aren't bonds supposed to be a safe haven? Well, my friends, you have something called decoupling that occurs when the markets crash. Margin calls are being made. Things are looking bad. People are trying to cover their short. Well, they're trying to cover themselves for the shorts, the short of funds they have in their margin accounts. It means they're selling everything. Gold was down for the day. Bonds up a little bit, but overall bonds are way down. What does that mean for us? It means that the margin calls are being made. People are covering where they're short. And when that is over, you'll probably see bonds moving up more. Gold has been moving up, but right now, bonds are just trundling down. Now, again, I don't claim to be a bond expert. That may or may not happen. I don't care what happens. I'm not trying to guess the future. I want you to understand that. I'm following the charts. I don't care what happens as long as I can read the chart. When there's a problem reading the charts, when it's super choppy and crappy, like it is many times in the summertime trading zone, that's when things stink, when you don't have volume, you don't have movement. When I have volume and movement, I'm a happy camper no matter which way it goes. And here lately, it's been very good. Now, what do I see going on with bonds? They've resumed their downward move as far as the weekly chart goes. Price percent oscillator heading down, derivative oscillator losing some downward momentum. Losing downward momentum. I was looking as I was saying that at what's happening with the candle here. We have a red spinning top after a prior week of a green candle and a solid green candle before that. What we see happening is the resuming of down movement is what it sort of looks like, although we saw a lot of that disappear with that long wick. We did reach a lower low. Let's look at the 2-day. What do we see there? Well, as the 2-day goes, look at that. Crossing over, going down after 2 prior days of lots of down movement. We'll see how this candle wraps up on Monday. What did I tell you to look for yesterday on that? A potential 2-day recross that could get you into more down move in bonds. Now, what is that? What do you look for in down moves in bonds? Well, you can look for something like puts or something like TBF. What's Tango Bravo Foxtrot? That is, in fact, the ProShares short. It's just a single short of the 20-year bonds, TLT. And look what it does when bonds go down. Magically, it goes up. Now, the price is a lot less than what bonds are right now, but it's primed to move with derivatives in the way that the people who manage it. The fees are higher because what it does is it's set to move in direct opposition, percentage to percentage, opposite of the underlying ETF, which is TLT. So when TLT goes down 1%, TBF goes up 1%. Now remember, the thing about these, and the reason I encourage you to practice them, is you will find out very quickly that the way these things are rebalanced on a daily basis, that if it goes up 2%, then it goes up 2% that day. That's locked in. Then it goes down 2% the next day. It goes down 2% from the new price. So again, it's something you need to practice, like everything else we teach here. So we see the weekly, what it's doing. We see the 2-day, what it's doing. And the half day, we saw lots of movement over the course of the day. On Friday, like we said, it was up a little bit, 0.33%. Overall, pay close attention to what's happening on that 2-day chart. Very important. Hopefully you'll have a 2-day recross as my dog barks to remind you in the background. Now, gold down for the day 0.70%. I'm trying to see if that's 0.70 or 0.7. It's 0.70. There we go. The glare was affecting my ability to see it, so I had to switch charts. Now, what do we see going here with gold? Let's start with the weekly. Strong up candle, the biggest up candle we've seen in a while, with a long wick on top. Price percent oscillator shooting to the sky. Derivative oscillator heading up. Nice up week overall for gold. Friday down a little bit, like I said. And you can see as far as the week goes, it was, the only really down day that we had in gold, what it looks like. Well, I take that back. I'm looking at the 2-day. I'm thinking I'm looking at the half day. There we go. I thought there was more going on. We actually had things spike up, move up on Monday, spike up on Tuesday, move down on Wednesday, sideways on Thursday, and then down on Friday. So we really had two down days during the week. Let's get back to the 2-day. We can see the price percent oscillators flat, derivative oscillator losing upward momentum. And again, we'll keep an eye on things, seeing that red down candle form. That's the first solid red down candle we have seen since way back. I mean, going back to early February. So we'll keep an eye on it. Price is still well above that 2-day, well above the weekly. So we'll see how much of a break gold's taking in its upward movement on this half day. Like I said, that's where we saw where things peaked on Tuesday morning and then, over, sideways, over. So we will redraw our trend line here on this half day. And we'll continue to keep an eye on gold, hoping that it's going to take off again, which I believe it's bound to do. You look at that big up chart on the weekly. All things being equal, the market tends to move in the direction of what? The largest chart, and that is the weekly. And for gold, that is up. What's up with Bitcoin? Well, we look at Grayscale Bitcoin. It is down for the day 4.10%. We look at our futures in Bitcoin, future charts. We see BITO down for the day 3.38. BTF down for the day 3.31. My favorite, XBTF, that is the VanEck. The reason I like it so much is because the fees are the lowest, down 3.24%. So it's a down day in Bitcoin. And what do we see going on our weekly candle? Well, we see a red spinning top, almost a doji for the week. Price percent oscillator is about flat. Derivative oscillator is red, losing downward momentum. We go to the 2-day chart. What do we see there? It's still positive, flat on the price percent oscillator. Derivative oscillator still holding in the green, but losing energy. We have a red down candle that's forming. Really peaked, back on Wednesday and Friday. So, end of last week is where the peak occurred, and just sort of trudging down over the course of this week. We look on the half day. Let's not look there. Let's look at a more active chart. We can see again where Bitcoin popped up strong on Wednesday of this week, started losing it in the afternoon on Wednesday, and then down Thursday and Friday. So again, Bitcoin just ain't there yet, my friends. It is trying, it is struggling to find a bottom. Hasn't hit that low in a few days, but again, well, actually, when we look at the weekly chart, we can see the most recent low going all the way back to the end of January, sliding sideways back and forth, trying to find a bottom. We're just waiting carefully to see when Bitcoin is going to gain that energy crossover going up and hopefully repeat its performance that we saw, well, back in 2020 or back in 2021. We would like to see that again in 2022. We'll be standing by with you, waiting, watching, ready to pull the trigger on those practice trades. In the meantime, you got to practice it if you ever want to trade it for real. Thank you so much, my friends. Appreciate you being with us. I'm going to put those two trainings on the ATR and the always winning strategy. Please watch both of those over the weekend. I think it's some of the most important lessons you're going to learn. Take them to heart. Watch them again and again. Take notes. Pay attention. Put it into practice. All the best from the whole team at Charting Wealth World Headquarters.